Sports card entrepreneurs, do not go to jail for 1099 tax fraud. I can help you reduce your tax bill by a lot. Let's talk about 1099. I'm Jonny Petrucco, an IRS Enrolled Agent, and I want to tell you and educate you about 1099s, especially 1099Ks that we've received from eBay and other payment processors. But before I educate, I can just give you the short end of it. If you don't want to know too much about it, you just want to leave it to your tax guy to give you the expert advice. So basically, the IRS has reduced the reporting standard for third-party settlement organizations like eBay from $20,000 in sales and 200 transactions in 2022, and it got delayed a couple years. But now in 2024 tax year, it's $5,000. If you made $5,000 in sales, what happened is these payment processing companies are sending a copy. They're letting the IRS know, hey, this guy with this social security number or this EIN number made this amount of sales. So if you don't see him report that, you can come after him. You have permission to come after. It's unfortunate, it's going down, and in 2026, it'll be $600. So yes, although technically if we made $1, we're supposed to report that, but now there's no option, okay? The IRS knows if you made $5,000 over in sales, they got the record. So how can we report that in a way that shows as least taxable income as possible? Well, as a hobbyist, you can report your cost of goods, but hopefully most of us are businesses, and there's a lot that we can deduct in addition to cost of goods, supplies, travel, right, home office. So this is what we want to really get in there. But what if you don't know how much you purchased something for? Are you allowed to deduct a purchase if you do not have a receipt? Well, generally, yes, you can deduct a purchase, even if you don't know exactly what it was for. This runs a risk, obviously. If you are selected for an audit, the IRS will request receipts, but if you don't have a receipt, they will accept reconstructed receipts. So they are reasonable. Okay, not always reasonable as we would think, but when it comes to, hey, you bought something in cash and you don't know where it went, they understand this kind of thing. So it's reasonable to deduct your real expense. It's okay to approximate, but there has to be some kind of basis for that. And if you have to approximate, then there's the risk knowing that they will come, and depending on the auditor, they will request some backup for what we put on the tax return. And if it's in good faith and it was an honest guess and this kind of thing, yes, they still can disallow that deduction, which, hey, it's much better to put it in there and then have it disallowed. So you can go at this on your own if you want to file your own taxes. It is helpful to strategize with someone and to even check with you to make sure that you have all the deductions possible, that it's reasonable, that it passes the sniff test. But it's obviously, hey, the best situation. We're recording our purchases. We know exactly what we bought things for. We have a monthly bookkeeping system. We're clear concerning all these things. So that makes what we put on the tax return much easier, much more verifiable. But every situation is different, and we can work with what we have. Now, to give a little background on 1099s, there are around 40 different kinds of 1099s. 1099-K. So this is the one for the third-party settlement organizations, payment processors. There's also 1099 NEC, non-employee contractor. And so for that, for example, that's always been $600 or more. The person who paid a contractor has to issue a 1099 if they paid them $600 or more. So this is where you can see 1099Ks is dropping the standard from 20,000 down to 600 by 2026. It's going to take 4 years because it's a lot to change, and it's a big thing. But anyway, 2024, right? We have $5,000 as a threshold. 2025 tax year will be $2,500 and then $600 in 2026. So what if the number on your 1099K is different than your number on your bookkeeping system or what you've tracked? You receive a 1099K for $100,000, but you look at your records on eBay, it's $90,000 is your sales. So this discrepancy is important to understand because the IRS got you made $100,000 on this 1099, and the IRS received this 1099 saying you made $100,000. But what I've found, the discrepancy is related to sales tax, is related to refunds, and related to personal items. So let's look at these three things. Sales tax. That's not technically income, it's a liability. We're collecting sales tax and remitting that to the state. But for some reason, eBay likes to include sales tax in the 1099K. So the workaround here, you could on your Schedule C put the sales tax under the taxes and licenses deduction, even though technically sales tax is not income and it's not an expense either, it's just a liability. But there is also another way to go around that. Certain tax softwares allows you to put checkbox for, is this 1099 personal income or something else? So that's another workaround, but the IRS has already stated, hey, sales tax is not taxable. So that explains one discrepancy, but we do still want to put, when all possible, whatever that amount is on the 1099, put that in as your gross sales. Another reason is refunds. And this is a little easier because there's a box for gross sales and then net sales. Gross sales minus your refunds is your net sales, and that's easy. Put in 100,000 for gross sales, take out your refunds, and that's your net sales. So that's a very easy reconciliation. Okay, how about personal belongings that gets wrapped in with your business income? The IRS does have this thing where if you make a gain, even on a personal item, you have to pay capital tax on that gain. If you have a loss on a personal item, then you cannot deduct the loss. But usually personal items depreciate in value, so most of these should be losses or washes. And so in that case, again, technically personal income should not go on a Schedule C for businesses, but that is another possible workaround where if we had $1,000 in sales of personal items and you know for sure that this is at a loss, you can match it up to $1,000 in expense. So it'll wash out. Again, there's other software that you can check off and put personal income for the 1099. And then there's more technical, but the Schedule 1, there's a way to put that wash there as income and deductions. And logistically, it gets worked out. But yeah, personal income for gain, yes, that does need to be reported, but most of the time, right, it's at a loss or a wash. And again, if you don't have the receipt, just do our best. If you have good faith that it's at a loss, you can just estimate. You do want to, again, make sure that the 1099 amount that you've received from that on that 1099 statement is put into your tax return, because that'll be a little red flag notice if it's different. There is more to this topic, more nuances, and if you have a question, feel free to reach out to me. You can leave a comment on this video. Subscribe, by the way. I'm going to be releasing frequent videos, and I have a lot in store and ideas to help those in this hobby. And again, I just want to be a good resource for the sports card and collectible entrepreneurs. Reach out if you need anything. Thanks. And at Sports Card Tax Guy, we help our clients trade their IRS stress for financial success. Take care.